Good morning, good afternoon, and good evening to all. Myself, Vaibhav. It seems like the USDJPY might finally be able to rally beyond the recent consolidation range of 109.5 to 110. This time around, the probability is looking a lot higher that it will be able to sustain the break which we have seen in today's session above the 110, and it might go on to approach the 110.5 level by the end of this week. On the data front, we had German IFO business climate indicator showing a decline to 99.4, which is the lowest level of almost 3 months. And this can be termed as a moderation after substantial improvement seen in the prior months. It touched the post-pandemic high just slightly below 102, and afterward it has declined in last 2 months as people's optimism for continued improvement in economic conditions is getting a reality check with a resurgence of COVID cases and supply side constraints hindering the steady improvement in economic activities. For the US, we had these durable goods orders, which were lower by 0.1% in terms of month on month for the month of July 2021 after rising in prior months. It is mainly because of the contraction in orders for the transport equipment along with the decline also seen in the capital goods orders. On the commodity side, the US WTI crude oil inventory data released by EIA shows the inventory level reaching the lowest level since January 2020 with decline of 2.979 million barrels for the week ended 20th of August. This is likely to support the revival in trajectory of the crude oil prices higher after a recent dip towards the levels of $60 per barrel. I expect the crude oil prices to once again cross above the $70 per barrel mark in coming days. Now let's see what's happening on the charts. We will consider the technical outlook for USDJPY, which is the instrument of choice for most part of this week, and today also it is looking like a promising trade is possible in USDJPY. So again, we will take a look and we will see how we can exploit the breakout which we are observing in the USDJPY. Afterwards, we will also take a look on the gold, which has declined in today's session, and it is below the crucial level of US dollar 1,800 per ounce, and we will see if there are any trading opportunities in it. Let's start the session's technical segment with the technical outlook for USD first. This is the daily time frame chart, and here, as you can observe, we had this consolidation phase extending for most part of this week. And if we have a close with sustained gains in today's session, I think that can be turned as a game changer. And in course of time, most probably by the end of this week, we will have the USD trading closer to this consolidation high, this prior consolidation high established just shy of 111. It is, I think, probably around 110.8. I'm not precise here. And looking at this consolidation phase where we have the formation of a higher low, the chances are that if this time around the USD is able to sustain the momentum, then eventually in course of time, most probably by next week, we will have the USD crossing and approaching the 111 mark. But that is for another day. For immediate term, we will be looking to exploit the situation where we can go for the trades in USD above 110 level. For USD the gains have been kept around the central pivot point for last many days. We have these fresh attempt being made this time around. It will be interesting to see how the formation plays out. In the first half of this month, we had the USD holding well above the central pivot point mark, but after that decline, it made multiple attempts but not well much success. And now it will be interesting how the day closes for USDJPY. Chances are looking a lot brighter this time around, and if that materializes, if we have a break above the central pivot point, then I think that changes the equation in near term, and next 2 days we can expect for a bullish momentum to be sustained in price action, and a move towards 110.5 can be expected, and we can also look for trading opportunities therein. Regression curve is trading almost flat as the formation has been mostly driven by this price action which has tended sideways. We don't really have big moves on either side. On the lower side, the losses were capped around the 109 level, and on the higher side, 110 is proving a crucial resistance. So the breakout above that high importance, becomes of high importance, and we can then try to exploit the situation. He, Here we have these prior consolidation highs, and this can be utilized as a critical marker. We are not really expecting a sustained one-side move, and of course, some correction can happen even from current levels. So, what we will do, or what we can do, is wait it out for next correction after these rally starting closer to the 109.6 and extending well beyond 110 level. So if in tomorrow's session we have correction and do consolidation while holding closer to 110 mark after forming a new swing high above these prior swing highs, then in that case we can go for a new trade anywhere closer to the price band of 109.9 to 110 while keeping the stop loss anywhere closer to this consolidation low of 109.7. I think this should be a good probability, probably stick trade with favor of in bullish momentum. We can expect then the target to be kept closer to the next level of around 110.5. In that case, we will be getting the risk reward ratio of even better than 1 is to 2. We will have the target price of around 50 pips, whereas the risk we are taking is going to be around 20-25 pips. So that is going to be favorable even from our conservative estimates. Now let's see what's happening in the gold. Gold we are considering after many days, and lot has happened in gold in recent past. We have seen these sharp moves, and now after reaching closer to these prior consolidation highs, the gold has gone in a sideways movement, and we haven't really seen big moves after the start of this consolidation phase, and in last couple of days the gold has traded in narrow range in between the price levels of 1780 per ounce on the lower level and just close to 1810 on the higher side. Now in today's session we are seeing bears getting a stronger hand and pushing the gold prices lower, but we are not really looking at a big move on the lower side. Rather than that, I think in near term the gold is likely to trade or continue to trade in a range bound manner, and we can mostly rely on the lower time frame to get us the optimum entry and exit point. If you consider its pivot point formation, you can observe that its gains were capped around the central pivot point, and after this consolidation, finally, the pull on the lower side is likely to get the gold closer to these immediate consolidation lows. So you can expect this first support of this month's pivot point series to act as a strong support in near term. So because of that, it will not really be prudent to short the gold on the current level, but watch out how the gold prices behave after getting closer to this support. And if we see that gold goes into a consolidation phase and doesn't really break below these first support, in that case we can even take the buy trades anywhere closer to the levels of 1780 whenever we see a fresh momentum building up for the rise in the gold, and in that case again the target can be kept closer to the central pivot point. So we can basically exploit these formation of range bound moves in the gold with resistance at higher side closer to the central pivot point, while support can be considered closer to the first support of this month's pivot point series. We also have 200 SMA now catching up with the price action, and if we consider the price action data, we also have these prior swing lows closer to the 1780. So all these factors taken together are likely to provide the gold immediate support. But of course, first we will have to pay attention to the price action, and only when we see that selling momentum is waning and the gold is going into a consolidation phase, only after that I think the risk can be taken, and we can then again bet on the resumption of the gold movement on the higher side towards the levels of 1800 or even beyond that. So that's my take looking at the current price formation of the gold. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. For further coverage of the Dicoscopy analytics on the market developments, you can check out the Dicoscopy analytics page. Whenever you want to start trading, the J4S platform is available. It provides a seamless experience and a world-class trade execution environment. We are also available on the social media on Facebook. You can join the page and get involved for in-depth discussions on the market developments. That's it for the day. Thank you all for joining in. Have a fabulous day ahead. See you next time. Till then, goodbye.